Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, May 6, 2021. I'm going to start out with the broad markets as usual here. Quick update there. Roll into some of the, and then some of the recently highlighted trade ideas we'll hit on, and I'll try to keep it in this order as well if you want to skip ahead. Natural gas, crude, ETCG, that's Ethereum. Gold. I'm going to just talk briefly on mRNA, Mirena. I'm sorry, not Mirena. I think that's an IUD. Moderna, sorry, Moderna, the vaccine maker. AMC, Peloton, PTON, ROKU, Roku, TUP, XBI, SOXX, MOV, Mara, and then Tesla. It's just how I scratched them down in no particular order here. Again, so you can skip ahead if you want to, and I'll stick with that order there. Okay, starting out here, this is QQQ. So far, so good. We had the recent sell signal here on a break of the big 334. Well, not big, but big to me. It needed to get that level to get a sell signal. And we had our first leg down, hit gap support, as mentioned the other day, bounced, and reversed right at the bottom of my bounce target zone. Where I mentioned that's an objective area to start scaling back or adding back shorts, about 332 there. And so far, decent, nothing big, but if you did so, you're good for about 1.5 to 1.75% so far. Back down to that previous low. Traders always watch previous reaction lows, plus it was support to begin with. That's about supposed to circle that, but that's about 327, give or take, 326 really, and we need to take that out. But as I said back then, even that day we hit that level there in the gap support, even though it bounces likely, I still favor a move to at least this. This is a big level, 324.32. Again, big level if you're just catching up, because that was the top of this. Or it was resistance during this correction that we had. That was the biggest correction in many months, 12% drop in the Qs. And finally, we had a breakout here, a impulsive break, a gap, and run above there. So that put us on a buy signal, which recently that rally fizzled out with this divergent high. And then, of course, we're on a sell signal now. So based on the divergences and everything else, favor at least a move down there. And again, how you trade it, it's up to you. We could certainly go through there. There's a lot in the charts that would support a bigger drop. It's hard to say. The trend has been resilient. We've for many months now, the corrections have been relatively mild, but again, I've spent a lot of time talking about the long-term charts, excesses, bull to bear, bullish and bearish sentiment readings, put to call ratios, things like that, which say we could be looking easily at a double-digit drop. In other words, off this high. We're not going to get straight there, but solid break below that level. If we get well below there, that's going to most likely open the door for a much deeper move. How do you trade it? It's up to you. You can, if you got a decent short entry the other day or yesterday even, you can put stops at break even. You could have stops just above that gap, give it a little more room. The more room you give it on any swing trade, the more likely you are to catch the bigger trend. Of course, the downside is, the more losses you're giving back should that trade get stopped out. So, you need to take your own outlook on the market, where you think it's going in the coming weeks, and again, if you're just outright bullish, just looking for levels to buy, you don't short, then that's a pretty darn good level right there, about 324.32 if we get there. And look, we're not that far from it now, so a case could be made at stepping at the top of the gap as well, maybe average down or add to it if you down to 324.32. Or we'll call it 324, with a stop somewhat below. Somewhat is up to you, whether it's 1-2% tight stop, 3-4-5%. All depends on how much you're looking for. Every trade, you should look at it through the lens of your risk reward ratio. Meaning how much money you're willing to risk to make a certain amount of profit. I like to typically use at least a 3-to-1 risk-reward ratio, meaning I'll risk $1 to the downside to make $3 profit. And therefore, so depending on what your target is, if you think the Nasdaq's going to new highs and beyond, and we've got another 10% plus upside, you could easily then give yourself a 3% stop loss if you were just targeting another 10% up. All right, that's how it works. Moving on, that's that. I think we're going to get there soon to that 324 level, and then maybe more. Let's take a look at some other charts here. SPY, S&P 500, still holding up. Got to give it credit. This is the broad market. This is a more indicative measure of the stock market and the economy, because you have different sectors in here, more diversified, and you have sectors that aren't represented in the NASDAQ 100. That's a very tech-heavy index. So far, this has been a more of a tech correction, and tech's a leading industry. It could be sector rotation. We'll see. But to really get the party started on the short side, you need to see this. I think you need to see this 410.39 level get taken out. And if so, I've given you the targets before, and we'll go from there. If and when we get that confirming sell signal for the market, and that'll help support the case for a longer term swing trade, and maybe take out. That might help. We'll see. I was going to say take out that support level on QQQ, but here's the thing: if you get to this gap support at the same time QQQ falls to support, well, the odds for a bounce are even that much better. However, should we just blast right on through there? Who knows? Sometimes that happens when all eyes are thinking, oh yeah, we're going to bounce on support level. You smash through it. That's very, very bearish if that happens. But again, I do favor reactions off these levels, at least the initial tag. So if you're an active trader and that's how you want to, trade, game things. In other words, game a bounce off that first target zone. Recycle back in short if you get a bounce back to 410.39, or close out any longs that you took there. For the next leg down. Again, we'll just have to see how this goes. First things first, we haven't even broken down. We don't have anything remotely close to a sell signal, other than a very short-term sell signal right here when we broke the 416.68 level, and that was also mentioned. We backfilled that gap, and that was an objective short for the SPY. But again, right now, you're really working hard to make anything on the S&P 500 because it's so diversified. Some of those sectors are holding up, and you're just grinding around sideways. So again, my preference right now are the small caps and the NASDAQ 100 if you're going to short large cap index. Small caps, we're going to watch this line right here. It's starting to give way on IWM. That's my primary uptrend line off the March lows, March of 2020 right there. We are now pretty solidly below there. So unless we get a stick save soon, we're going to have a sell signal for the first time in a while, since really back here. I think we had something on the 60-minute chart there that triggered that, and some back here. Actually, yeah, there was a 60-minute uptrend line right there. But this will be the first sell signal on the daily chart in quite a while, and that opens the door to my 205 target, minimum target. That's a good swing target for IWM. And then if and when that goes, if this, we start to get into, correction mode where we can say it with a little more confidence, especially with the S&P 500 breaking down as well, then we might be able to position, either hold out or reposition for a, add to a short, or maybe, add short exposure, or game a bounce here. We'll see. Again, I think we'd get a reaction off 205. But it all depends on what's going on with the large caps, I think, at the time. And I'm just trying to say that that would be a minimum swing target from where we're at right now. It's still about 6.5%, and it has the potential there, if we get a real nasty correction, about 22.5% from where we're at right now. But that's the most important thing on IWM today. Quick look at the futures, and we'll roll on to those other trade ideas. I'm trying to talk fast because I want to cover a lot, get it out to you guys. There's NQ, NASDAQ 100. It's going to look like QQQ, very similar. Support zone right here, and that's that comparable level right there. A lot of big reaction highs, and there's our breakout right there. That was put us on a buy signal, and that rally ran its course right here with this divergent high breakdown on the minor trend line, and then that was, to me, the most significant sell signal right there recently, that break of 13,700. And so far so good. But if we can take out this previous low, keep in mind, if we take out that previous low, here's what happens. We still have pretty significant support just below, and you're also going to have, at that point, if it happens today or anytime soon, tomorrow, you're going to have some positive divergence here, which could play out. So if you're looking to go long, again, step in there, stop somewhat below. However, fewer things are more bearish than a failed bullish setup. And so if we get the divergences and for whatever reason the NASDAQ 100 NQ futures just solidly take out this support zone and burn through these divergences without much of a bounce, then that's going to be pretty darn bearish, and that can open the door again to a much bigger drop, measured well into the double digits, I think. Okay, Nat Gas, here we are again. I've pointed out numerous long trading ops, as well as time to get out when you get close to that 310 target. At least that was my preference. Pullbacks to the trend line have worked, but as I stated recently, at this point in time, you're not going to, trend lines don't last forever, and based on the divergences and the proximity to that resistance level around $3, there's a decent chance we're going to break this support. So again, this is, at least for me, where I stop buying pullbacks to that trend line, and might even look to short it if we break the trend line and swing it back down to, I'm going to give you one more. I'm going to change this. That was an old price target on the way up. Going to put a line right about here. Well, yeah, let's start right there. That's the first support. Second support. It's hard to say. I'm not super keen on shorting commodities because I've been so bullish on those. The pullbacks have been usually bought up pretty quickly, but let's just say that would be your pullback zone anywhere in there. And potentially down here, all the way back down to that 2738 former target. So, the way you can do it is you set a stop if it breaks down, and just either leave that stop in place or periodically ratchet it down if you're trying to swing for a move back down to the 2738, which I think is possible. Natural gas is volatile, tends to move, even though it and just about all other commodities are in bull trends. Within the bull trends, we're only looking at a 60-minute chart here going back 3 months. You still get these bull, micro trends, if you want to call them, or swing trends. Again, that's all swing trading is capturing these shorter term moves, where investing or position trading is you'd have a long-term position in natural gas, and you'd have to just ride out these pullbacks, which measure well into the double digits, and most people aren't comfortable with that. And so that's usually why with natural gas I'm usually swing trading instead of position or trend trading. Okay, ETCG, just because that's how I had it listed on my pad from yesterday, my scratch pad, to cover them in this order. Again, nothing to do with natural gas or any other commodity, but I was walking up this uptrend line. We hit my $48 target here. The breakout, there was your buy signal when we took out 22.44. It was mentioned before that breakout point. Several back tests, and so far from the 22.44 breakout and or multiple back tests, this thing's rallied about 300%. So congrats, I caught it. And look, I mentioned that's the only target I had because there were no other previous reaction highs there. There was that one, but we just started trading this ETF. Ethereum's been around longer. Remember, this is a sort of like an ETF. I believe it's a closed-end fund, so it can trade at a discount or premium to the price of Ethereum, but they're buying it now. Bitcoin right now is sort of stalled out, and I think this is the new Bitcoin, at least for the time being. That's where the momentum is in Ethereum. That's why I've been highlighting on this one. And if anything else, short Bitcoin and the Bitcoin proxies, which we'll get to in a second. I'll cover that when we get to Mara. Alrighty, next up is gold. Continue to be bullish on gold. I like it. And this is more of you can call it a swing trade, but also a trend and position trade. I made that clear. This is where I think, long-term investors could recycle back in if you closed out a few months back when it topped out and it was at resistance and the charts were indicating a correction was likely. And so far so good. And again, remember we had this divergent high here on the 60-minute chart, just like we had this one. And all they're playing out, but for relatively small corrections. And was last mentioned before we got here, objective long entry back on a pullback to 1759.75. So there you had a couple opportunities there. And moving up. Now it is headed up for a back test of the trend line and to my next target as well. My next target on the futures GC is 1817. But again, you define your trading style. If you want to try to actively game the zigs and zags, you can do that, or so far so good. And I can tell you at this point in time, this is a pretty good level. That 1759.75 level I've had on here for a while, but since then we've had more reactions. That we broke out right there, and we've come back and back tested or near back tested for a while. So there's a level somewhat below if you want to, for a longer term trader, relatively tight stop, but nothing changed. If we make another jog down towards the bottom, this is still, the bottom end of my long term support and buy zone on the gold GLD daily chart, which I'm not going to get to now, or this video is going to go on forever. mRNA, I just want to talk on that. We have it's still a lot of companies reporting earnings. We're still in earnings season, and Moderna, mRNA, down today pretty good. This is probably due to, if you read the headlines, the Biden administration has decided to temporarily, let me see, the U.S. is backing a waiver of intellectual property protection for COVID-19 vaccines. Biden administration saying it's backing a World Trade Organization proposal for a temporary waiver of intellectual property protection for COVID-19 vaccines to help speed up global production. And I get that, help the world. From a business perspective, that's no bueno. If you're a pharmaceutical company, I know everyone thinks they're the scourge of the earth, but they invest a tremendous amount of money to come out with these drugs that come to market, and so people only look at the profit on a single drug, and they don't realize there's a dozen or three, four, 5 dozen that failed before that, and a lot of money lost. Either way. So what this basically that's not good for these companies, because even if it is temporary, the big pharma saying it's not going to do any good because the cost of the production facilities that these knockoff companies would have to set up is too big for them to bear. But you give them the secret recipe, and even if those the intellectual property protection is put back on later on, well, they've got the secret ingredients. They can just reverse engineer or come up with something similar on their own, and it puts them light years ahead, on the competition. So either way, just remember that's just not a good thing for business when you start having the government come in and change the rules. And then chart wise, I wanted to point it out because they report after the market closes today, and what you're looking at here is just a big bearish setup, a big divergent high. Look at this negative divergence right here, and there's your uptrend line right there. So one to watch for potential short trade idea. Where does it go? Potentially all the way back down here to 54. That would be a huge drop. But you have these other reaction lows you'd want to look for first. Target those. So not one of my favorites. Again, it's an earnings play. You have to wait. I would wait to see what they do after earnings and then go from there. Another one reporting tonight after the market close, or AMC, is AMC. AMC, crowd favorite for the Reddit group. It's kind of stalled out here. I had this uptrend line we broke a while ago, and I have a lot of lines there. Ignore, it's a busy chart, but here's the bottom line. We've been moving sideways like this. A lot of hot air in this stock still. So if they drop, if earnings takes them below the bottom of this trading range, they're probably going to head a lot lower. Where to? Maybe 530. I think that's a good swing target right there. That'd be a big drop. It's at 930 now. And of course, be careful with AMC. You guys probably know the history on it. The Reddit group thinks they've got it all figured out now because they engineered a couple big short squeezes. But again, just sharing it as an aggressive trade idea, but more importantly, watch to see how they trade after earnings. The other one reporting tonight is Peloton, PTON. I listed this as a short trade setup. So far, so good. We broke my 98.68 support. Recently, we had a sell signal here. Had a small break, but then a nice, solid close below there back on Monday. Followed through. Big red drop so far. That's their finally recalling the treadmills. I don't know if you guys have seen the videos online. Poor little kid got sucked under the treadmill. It's a pretty dangerous feature. So Peloton resisted, refused, and finally caved, and are recalling all their treadmills. So that's obviously not good, financially for the company. It's going to cost them a few bucks there, and but it doesn't matter. The charts price this stuff in. The news is usually a catalyst. Remember, the breakdown occurred before the news, so it's not like you missed the run. The breakdown was right there, and this one's good for about almost a 19% drop into today's lows so far. And they report tonight, so two ways to trade it. After they report, if you're not already in it, kick back up to that resistance zone would offer an objective entry anywhere to the bottom of the top, about 98.68 up to about 104.42 or 104.50. And if you're in it and we gap down to 72, you want to cover. On earnings, I'd like to watch after the market closes. And you might want to have a limit order if that's all you're targeting, the $72 level. I think that's pretty good for the time being. If you get that quick, in less than a week, if you can get that would give you a profit, a drop of about 27%. Take the money and run, is what I would say. If things get really ugly, maybe we go all the way back to 38.48. Probably won't happen tonight or tomorrow, but potentially longer term, depending on what happens there. Alrighty, so again, that one's after the bell today, and another one after the close is Roku. And here's one, like quite a few stocks out there have already topped. So I've talked about this recently. You can make money shorting this market. You just, lately you can't short the broad market, the S&P 500. It just grinds higher. But there are a lot of stocks and some sectors that are starting to roll over. Roku, put in this bearish rising wedge, broke down here, then took out that 386 support. Hit the 295 was the next support, or is now. I just added this line today. I've had this one here before. We bounced up there, and we're just taking this out. But remember, they report tonight. What happened recently with Roku? I got an email from. I use YouTube TV as my cable type service. It's a streaming service. And they said Roku's decided they don't want to play ball anymore. They don't want to allow YouTube TV that YouTube TV app on their Roku devices anymore, and and that's because they're trying to, everyone's trying to do what YouTube's trying to do, and Netflix. They all want to be king of the streaming market, and here's the thing: they picked the fight, with David picked a fight with Goliath here. YouTube, don't probably want YouTube on your bad side, so YouTube sent a message telling their subscribers, contact Roku, let them know you want it back on there. Either way, they're reporting earnings. Let's see where they go. If they can't regain this 295 level, they're probably going lower. And if they do, and they bounce up to 386.24 after earnings, that would be another objective short entry. And if they break above 386.24 anytime soon, maybe the correction's over, and that would be bullish. There is some potential divergence forming. So right there. So again, one to watch, although the RSI is about flatline divergence. What else do I have for you? Okay, some of the other short trade ideas that I've highlighted recently, or trade ideas period, has been Tupperware. Tupperware I've highlighted in this range here, and we've had a couple opportunities, at least one opportunity since I first highlighted to short it at the top of the range right here. And the range measured from top to bottom about 21%. So you got about a 20% profit already. You could have covered again. I don't know, I have to check when they're reporting. But bottom line is, ultimately this range will break one way or the other. That's going to be bullish, upside break, and a break down below the range at the bottom, which is 23, would be bearish and take us down to my next target, about 1961. So that's one to watch. XBI, I've highlighted this recently, the biotechs. And I believe I mentioned here an objective short entry on this last pop up to that 139.60-ish resistance, and where it keeps failing. And so far that's good for about a 11% drop, but we're coming up on pretty good support right there, 122.43. So you can either look to cover a short position there, take the profits, or raise your stops somewhere lower your stops, and see if you can hold out for a breakdown, I should say. We've got a lot of biotechs, including Moderna, reporting tonight. So depending on how they go, you could break down, and the next target there is about 108 on XBI. Remember, trend indicator is bearish right here. this yellow line on the PPO. You want to look at this 9 EMA or the signal line, and when it's above that line, you are in a bullish trend. And when you're below, you're in a bearish trend. And often, when you're in a bearish trend, that line will act as resistance on a back test. And so, pretty important level for biotech. If they can rally from here, they can regain that yellow, trend line, trend indicator, if you will, or bull bear trend delineator, whatever you want to call it. And that would be your next bounce target. So you could go long at support, if you want to try to swing it up there. And if you do that, then you want to stop somewhat below there. All right, a couple more. Another sector ETF I've mentioned recently is semiconductors, SOXX. Recently took out the BOD or benefit of the doubt trend line right there, and we remain below it right now. And the semis, remember, as bullish as the narrative has been to buy semis, extreme shortages, extreme demand, automakers shutting down because they can't make enough cars right now because they can't get the semis. So you've got this huge demand, but how much of that's been priced into this big move we've had? And either way, the technicals are saying not good, because now we've broken that secondary trend line there. And trend indicator is still bullish for now, but if that flips, these are my targets for SOXX. Excuse me, 366. And then about 331. MOV is another short setup I mentioned recently. We've taken out this minor trend line right there, and you have this bigger price channel right here, and that's where I'm calling this one down to. We put in a pretty big divergent high, and I think we'll come back at minimum, visit the bottom of that channel there, the uptrend line, and maybe even probably overshoot it and come down to that 25.77 level. I have not scrubbed this one for earnings. You may want to do that. To do so, go to the on the right side of the chart.com, go to resources in the top menu, and then click on go down to the box that says tools of the trade, and there's an earnings calendar, and you can just type in the symbol MOV, and it will tell you when they report. Always be aware if you are in a swing position when you're, especially during earnings season, when your position is going to report. Okay, Mara, this is that Bitcoin proxy. It's going to move up and down, typically with Bitcoin, a lot like Riot. And that big level that I have color coded here is about 28.90 or so. I have it at 28.93 right there. We've been grinding around sideways, putting in divergence, and again, just like Bitcoin, GBTC, it's stalled out recently. So like I said, my preferred crypto proxy for a while, last few weeks has been Ethereum, and you can even be, if you want to do a pairs trade, because the cryptos usually move together, but not always. There's a good example. Ethereum's ripping and Bitcoin's stalled out. You could do a pairs trade, short Bitcoin, long Ethereum. Ethereum's getting, it's been a heck of a run, 300% a couple weeks on that ETF. So I wouldn't be jumping in right now. Like I said, on that kind of thing, there's no way to tell when it's going to stop. You just periodically ratchet your stops up, and then let it run. And then if the big level, I think on GBTC is about 39 and a quarter, we'll call it 39 right there. That's pretty big support. We early on had a sell signal right here, and we hit my first target zone right here. Actually, we hit it right there first, and then went to the bottom. And we've been dancing on that target zone, which is a support zone. So the bottom of it's at about 39 or so. If that gets taken out, I think GBTC, which again is Bitcoin, like an ETF proxy, same company as that ETCG I covered earlier, and that should take us down there at about 28.15 or so. And last but not least, again, just the order I wrote these down to cover today. There's Tesla. Still think Tesla's going to see sooner or later come all the way back down to about 465 or so right here. But we need to take out my 661, 78-ish support right there. We've been dancing on it lately. We've traded through it a few times, but I still think it's significant enough. And especially, you put a higher weighting on the most recent tags of level, So again, is that great when you trade through it there? No, but there are enough reactions in the past, and most importantly, again, in the last week or so, every pullback has been contained around that level. So, break of that level will ultimately bring us down there. I severely doubt we're going to hit that 465-ish target unless the stock market breaks down and we get that 10% plus correction in the market. Otherwise, if market's heading to new highs, Tesla could break down here, but it's a heavy weighted component of the S&P 500 and NASDAQ 100. It's going to benefit from inflows and a lifting of those other companies in there. Is it possible to do this with the S&P going on from here, or the NASDAQ 100 going to make new highs? Yeah, it's possible, but not likely. Hope that makes sense. All right, let's wrap it up here. I'll get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.